Okay, everybody. Scott Tash here. We are a finance company. We're not a bank. In fact, we don't confess to have a banker in the group. Our whole design of our company is to help companies like yours make more money by giving you financing options to your clients that are available. This will expand a tremendous amount more selling activity for you because it will eliminate a lot of the I got to think about it or I have to get the money together objections, and it makes it an easy payment plan. So in most of these people's minds, when they're purchasing something, they're weighing out the cost of the upfront money against what they're going to get a return for. So with financing, you're going to find that it will greatly increase when you can show somebody a $100 payment a month and show them how they're going to get a lot more return on that for their dollar. It's a no-brainer. They will look forward to this. And so also I want to show you how this affects you and how you can present this in order to collect the commissions that you so richly deserve for what you're selling. And since you've got a flexible price structure, I'm going to show you how to make what it takes to make a $1,500 upfront commission and to make a $2,000 upfront commission when you're presenting it with financing. And then I'm going to show you a quick tool on when you're in the field on what to fill out. And then Jessica is going to take it from there on how you are going to be able to put this into an electronic mode when you get home, find out if they are approved or not approved right instantly. And then these people can sign for their financing electronically over the internet. And it'll all be done in a paperless version. You'll take a small paper app in the beginning, but you'll just throw it away when you're done because we're going to transfer it all to electronic for you and make it very, very usable friendly.
So let me add a few words here. So Scott and I talked about how to make this as easy and simple as possible. And the first thing we came up with on that is, well, let's figure out how to arrive at a certain amount of money. You know, we tell them that, you know, $1,500, they should be going out there selling mobile apps for $1,500 up to $2,500. You know, let's figure 2 or 3, I think we have 4 different payment plans and structures that you can use as your guideline to be able to arrive at the $1,500 or the $2,000. And so what we have is, I think you're going to like it. I think the numbers make a lot of sense. You get to take a down payment. Again, I'm not going to steal Scott's thunder, but you get to take a down payment, let's say, for instance, of $600, like you see on the screen there, and you keep all of that. You keep the whole down payment. So if you've got to negotiate for the hard haggler and you got to knock 100 off or 200 off, you know, you just take it off right there. But the payment amount stays the same, makes it simple. You get the same funding amount from Scott's company. So anyway, back to you, Scott.
Okay, and it's very simple. One of the things that we wanted to do was make it so that in the people who, your retail person who is purchasing this, it becomes a very usable number. So we started out building all of this on a 24-month platform where a person could, and you can make $1,500. I want you to look right where the arrow is where I have 24-month financing. If you sell your app for $1,800 and take $600 down, they'll be financing $1,200. You will be paid out 75% on that. So you'll have $900 from us, $600 down. That's your $1,500 commission right there. The monthly payment for your consumer is going to be $59.88 a month. Combine that with your $40 monthly fee, you have less than $100 a month for this app to work for them.
And there you go. You hit another strong point. I believe that this package right here, this 24-month package, is going to be the top seller, personally. And the reason is because everything all-inclusive, your app, your maintenance fees, everything are less than $100. It's a real easy decision for a business. You know, small check down, less than $100 all in.
Okay, so we've got now, if you look over 18 months, we have an 18-month option. You can put it over. That monthly payment rises to $76 a month. If they want to pay it off over a year, it's $110 a month. But still, your commission breakdown is exactly the same.
Do we have the number? Do you have the numbers in front of you?
I can have them. I can do them right here off the computer. So.
Okay, perfect. So let's give them to everybody so they can at least write them down.
Okay, at $1,900. Okay, that monthly payment at financing $1,900 for 24 months is $94.81 per month.
Okay, and that's going to get you a $2,000 in your pocket.
This is actually is going to get you $2,025.
That's right.
$2,500. You are going to take $600 down. We'll finance $1,900. That monthly payment will be $94.81, and you will receive $1,425 from us plus your $600. That gives you a $2,025 commission.
And then the 18-month.
The 18-month, and pardon me while I have to figure this real quick. Let's do 12 while I'm doing this.
Okay.
The 12-month one, $1,900. The monthly payment is going to be $174.23. And again, the same process. The $1,900 down, $600 down, $1,900 finance. Your total commission is going to be $2,025. The
18.
Yes, forgive me. It's I think it's 6.81. Times $129.39. We'll have the exact on those, but I'm pretty close. At 18 months, it's right at $129 a month.
Okay, perfect. So there you go. That's how to make $1,500 or $2,000. Your sale price is $2,500 or $1,800. And I take this back to the merchant account days. This is how I made it really simple for my reps. We sold a terminal and a printer to take credit cards for $1,800. Write me a check for $1,800 today. Otherwise, we take a small down payment and a monthly payment. And that was a 4-year lease, so the funding was much bigger. But
yeah. Now, bear in mind with these people, if I were selling it myself, and I've got 30 years of doing this experience, I would go out with only 2 things in mind. I'd have my 24-month figures on a $1,500 or a $2,000 commission, and I would let the people know that there is no prepayment penalty if they pay it off early, and they'll be saving interest if they do. And I'd pitch them on $94.81 a month, so I could make myself $2,000, or I'd pitch them on $59.88, and I wouldn't worry about all of the others, because the simpler you make it up front, the easier it's going to for them to make a decision.
That's right. That's right.
This is, this is a great product, this service. We have 2 ways you can pay for it. You can give me $2,500 now, and it pays for it totally in full. And then you don't have to worry about anything else except $40 a month to maintain it. Or we have a finance plan. You can put $600 down, finance $1,900 over 24 months. That monthly payment's going to be $94.81 a month, and but you can pay it off sooner. They're going to say, what's the interest rate? You're going to say it's 18% on the declining balance, simple interest. And
hey, so make sure you write that down. Kathy, you asked that question, what's the percentage rate? So here it is.
18% on the declining balance, simple interest. You pay exactly $100.40 interest per thousand per year. So it is actually cheaper than your credit cards for the same periods of time. And I would just tell them that, hey, if they've got a credit card less than 18%,
repeat that.
Have them put it on the credit card and get a cash deal.
Kathy'd like you to repeat all that. I think she was sleeping and we woke her up. She was playing on Facebook, right, Kathy?
There we go. All right. Okay, it is simple interest, 18% on the declining balance. On a per $1,000 basis, you pay exactly $100.40 of interest per $1,000 finance per year.
All right. Potato's got a question. How you doing, Potato? Nice to see you, man. Something does not add up here. What about the fee to go mobile? You know what? You're right. So let me explain, just so you know. What this is obviously we're bringing the financing to the table. So we brought Scott and Scott's company. And Scott, tell them your company name.
Sam is the Universal Group, and it's Universal Guardian Acceptance.
Okay, and they're going to be a financing solution. So in other words, You go out there and you sell an app, a mobile app, and you're going to collect a $1,500 check, or you take a credit card if you have your merchant account set up, or you can offer financings, or they can write you a check. So you just, you're expanding your options on taking payment. This is one of those ways. Now, once you've collected what is here as your total commission, then you obviously have your costs. Your costs are going to be $500 if you had us build your app. Your costs are going to be X amount of dollars if you're paying a commission to a sales rep. Your costs will be maybe only $99 if you're building the app yourself. So those would be your costs. This is just a net funded amount to you. When you take that amount of down payment and finance those amounts there, you then net out the numbers on the bottom of that sheet there, total commission. So I hope that explains it a little better for you and everybody else too. He says, "Okay, now I see," said the blind man. So yeah, that's what I like about this. I mean, this is a proven strategy. 95% of the business we wrote, thousands and thousands of merchant credit card processing accounts, 95% of them were financing. I mean, it's just merchants out there today. It makes the decision so much easier. They can stroke a small check and again, I like the point that you added. You could pay it off early with no penalty. So that is the case, right? I mean, they basically all they have to do.
They only pay for the time they use the money.
Okay, so how does it work? Let's take them through that. Someone wants at the middle of the 24 months, let's say 12 months, they decide they want to pay it off.
They call Universal. They say, "I'd like to pay it off." We'll give them payoff balance, which will be minus any future interest, and they'll just pay that balance off, and they're done.
Perfect. Easy enough. Easy enough.
Now, just as a thought process for you all, when you are presenting this in the field, I'm all for cash. Don't let the 18% scare anybody, because if it scares them, your reply should be, "Well, if you have a credit card that you can put it on that's cheaper than that, let's do that." That will help you capture a cash deal right up front. So the person that has a 12% card and still has any limit available, they might just cough it up at that point. But what financing will do for you is it will keep the people from saying, "I got to wait, I got to think about it." It puts it into an affordable mode.
Yeah, and remember what Omar said. What do you mean you got to think about? What is there to think about? I'm just sorry. We just had a training last week, and that's ingrained in my head.
Hey, if you can't afford, look on the $1,500 one. If you can't afford $100 a month to improve your business, you shouldn't be in business.
Hey, I've got great questions from Tim Hood and Robert.
Go for it.
Tim, are we in a liable position if the client defaults? You're going to love the answer. Great question, by the way, Tim.
The answer is they have to make their first payment. Once they make their first payment, there is no liability whatsoever.
Okay, let me just make sure you heard that. Boom! If they make their first payment and something goes wrong in 2 to 3 months, there's no chargeback scenario to you. And that, that right there, that should put your mind at ease. That is awesome. I mean, I had a much longer refund period or, default period when we were doing all of those leases. Mine went into 3 to 6 months. I had a much longer exposure. So to only have that first payment, that's awesome. Awesome, Scott.
Yeah, and so your worries as a salesperson, the person is going to make their first payment. You know that because they're all excited about the product. After that, you have no more liability. How much better can it be?
Yes, love it. Eileen has a great question. Once the financing is complete, how long before we get paid from Universal?
We're going to fund at the end of 30 days.
Okay, so that's fine. If that's the way that works, then we can work with that. I mean, what's going to happen within those 30 days because of the down payment was made is the app is going to go into creation. We're going to go ahead and get started building the app. It's going to then go to go back to you guys and come back to us for a round of changes. So that happens during the 30 days. Now, I see Potato says 30 days is tough, and I know what you mean by that, Potato. You're saying, well, wait, we got to wait 30 days for that money. Here's the deal. Number one, you're going to get the $600 down, and that should pay for your costs. So that'll help out there. But once you get a number of deals in the pipe, what will happen is every week you'll have deals that will fund. You know, the first couple of weeks, you're going to have to wait for that first couple of funding. I mean, this is kind of how we did it, too. It's like, I remember the days where we were robbing Peter to pay Paul. I'd have to install the credit card processing equipment, call the leasing company with the owner on the phone to verify the equipment was there, just so that I could verify and get the funding. Well, I needed the funding so that I can afford to buy more equipment so that I can get the 3 other deals that were waiting for a week because I couldn't afford to give them their equipment. And it was this robbing Peter to pay Paul, and I used to always have to wait for those fundings. But once you get your pipe rolling, you have a weekly cash flow coming in from the financing company. It's going to be awesome. Plus, you're taking your upfront monies, covering your costs, and putting money in your pocket right there at the point of sale. And then the other flexibility you have here is if, you know, again, you have someone haggling with you and you almost got them and you can't push them over the fence, they're not willing to cut the check for the $600, does it make sense to say, I tell you what, to me, I hear you like the app, I hear you see, you know, clearly you see that it can you know, fill up the store on the slow days and with the push messages, and you go back to reminding them all those things they told you that they liked about it, and then you say, I see clearly it's just the money that's separating you from having this, and I don't want that to happen. I understand budgets and so if I could do it right now with just $300 down with the same terms, are you ready to go today? So you can do a drop close. You do the drop close on the down payment. I think that's the perfect, and you can drop 100, you can drop 50, you can drop 200, 300. Hell, you can give it away. You can drop the whole thing if you needed to or had to. Don't advise it because you want them to have some skin in the game, but that's your money to play with. If you want to take a higher down payment, you can. But you've got to, well, and actually you can't, right? Because then, Scott, you'd have to increase the sale price, right?
Actually, if they want to take a higher down payment, the methodology is they will put in, they'll have less of a payout from us, but they'll have more in their pocket. So if a person wants to put half down, we'll finance the other half, and you just put more money in your pocket.
Brilliant, brilliant. Okay,
the greater the down payment, the better it is for you, and the better it is for us because it takes more of the risk off in our pot and makes us happier, and we buy more.
Excellent, excellent. So Robert has a question. What does the minus future interest mean? Minus future interest. I think that's when you answered the question of how much interest.
Oh, a lot of companies, when they figure out, you know, they add up how much your whole loan is going to be up front, and then they front load the interest into it. Or some companies, when you pay off, you have a penalty, and you have to pay off a certain amount plus a fee to pay off. We have none of those things. And so you only pay interest for the number of days you have the loan out. So if you pay it off in 89 days, you're only going to pay 89 days of interest.
So I hope that explains that. Richard, great news. Richard says, this is really ironic. I just did a presentation on the $1,500 product to managing partner of 83 mortgage brokers. I told him the investment is $1,800, but if he recommends to his agents, it's only $1,200 each. Now with financing, the way he can structure this, he can get a full $1,500 a pop. Yes, Richard, and more of those mortgage brokers you're going to have a higher conversion of people that jump on board. So instead of maybe 15 people, you could have 30 people. Again, I'm just taking a shot at numbers, but you're making it easier, more flexible for more people. So right on. Perfect. So this comes at a great time for you, Richard.
I'll give you all a nice statistic. Most companies, when they have financing behind it, increase their sales between 22 and 70%. That's the
awesome.
Number of people out there that when you give them terms, they like the product, that they just don't have, you know, hey, it's easier to sell $59 a month than it is $1,500 cash out of hand. And those, you're going to get the fence sitters off of the fence with this. And especially the real estate people, because they're on the come with what they sell. So they're expecting a return from this to help that. So if they can spread that investment over time so that they can sell a few houses with this and make up the difference, they'll like that program a lot.
All right. Any other questions for Scott? We've got Jessica on that we want to bring on to show you the application process.
Well, I want to show, yeah, I'm going to show one thing. I want to go to one more screen here. So hang on.
Okay, you go to that screen and let's see if we can jog some more questions loose. Any more from you, Tim? You got any good questions for me? Tammy, Jessica, you're there. Alicia? Lisa Williams, come on, where's your question? Give me a good one. Myron, nice to see you. Ralph Morris. Mr. Sampson, Ryan, what do you want to know about the financing program? Show me the money. Let's see, here we go. Could we get an Excel sheet to plug in different numbers that we may have with different money down and price in the app? Okay, I'm going to let you tackle that, Scott. And Tammy, the answer is yes, we do want to roll out a structured program, but there will be people that want to go into an advanced mode and want to kind of play with the calculator a little bit, and I'll let Scott explain that.
And actually, Jess will explain it. We will be issuing out a payment calculator with payment factors. The interesting thing is that the payment factor for a...
My calculator does not include the payment factor. All they will do is plug in the amount that they're purchasing, the down payment, the term amount, and it will automatically give them their payment.
There you go.
It's very simple.
Jessica will provide you all with a payment calculator that you can plug it into, and away it'll take you.
And I'll go through the application.
So Janice says, if we sell the product for a number in between $1,500 and $2,500, will whatever tool Universal gives us tell us what the financed amount should be? Well, yeah, isn't that, those are all set, right?
Yeah, the financed amount is going to be the amount you sell it for minus the down payment you take.
There you go. Perfect.
And on 24 months, there is a payment factor of 4.99. So your payment is always 4.99% of whatever you're financing. If you take 4.99% of, hang on, we'll just pull that one back up again. Okay. All right. If you take 4.99% of $1,200, it's exactly $59.88. So if you were financing $1,000, it'd be $49.90. So we can provide you in the field with payment factors for 12, 18, and 24 months that all you need to do is multiply the payment factor to the amount that's financed, and you'll know exactly what the payment is.
And also, just to pipe in there, my calculator that I'm going to send to you guys, you can actually save it to your desktop. So if you're on your cells, if you have your laptop or
iPhone or
any other method to open this Excel, you'll be able to all you'll have to punch in is the amount that they're requesting, the amount that they're putting down, and the term, and it'll give you your payment amount. There's not going to be any figuring, no calculator that you'll need. It's very, very simple.
There you go.
Tim Hood has a great idea. I have to share this. Let me answer Tim Flaherty, who's on the phone here. I'm going to answer by text message here. Thank you, Tim. I was hoping you were on the webinar. I wanted you to come on and share some of your success with everybody, Tim. Brett will tell me if I can actually pipe you in from phone only. Brett, let me know in the chat window. All right, Tim Hood says, can I offer to make their first payment as a drop close? And then my liability is over since I know for sure the first payment is made equals zero risk for me. Smiley face.
The answer is no. That's called consumer fraud.
All right, explain.
You can't do that. Because,
explain, Lucy.
They're not making their payment. You made it for them. They can say, hey, I never made that payment, and then we have a consumer fraud issue.
So can't we just twist that a little bit to something along the lines of?
The answer is
no. No. Listen to what I'm going to say, because it's just how we talk about it and how we characterize it. I mean, it's like, hey, this is the price. I will waive your full down payment in full. Isn't that what we're doing when we're dropping the down payment?
Well, I mean, what you do with your down payment's up to you.
Exactly. So just want to make sure we're using the right language. So, as a drop close, because that's where we're going to work. The flexibility is in that down payment, right?
Yeah.
So if I got to eliminate it completely, go ahead.
Yeah. What you're saying is I'm discounting my program from $1,800 down to $1,500, and I'll take $300 down instead.
Okay, gotcha. So I want to make sure that was clear to everybody. And Tim, is that clear to you as well? Okay, so we can do that. You just got to basically, it's how you do it. That's very important. So thank you. Is there anything else that our resellers should know about, that, things that you definitely cannot say? Maybe there's a list of cannots, do not says.
Well, not that I'm aware of. What you don't want to do, although here's a don't. You don't want to say that it costs more to finance than it does to buy it cash. You can say, I will give you a cash discount for paying cash today. And you can give a discount on anything, but you can't tell somebody it costs them more to finance it than it does to buy it outright. In other words, I can say, hey, to close it today, I'm going to discount your price. But I can't tell somebody that it's normally $1,500, but if you're going to finance it, it's $1,800. You have to say it's $1,800, and if you pay cash, it's going to be $1,500.
Gotcha.
That makes
All
sense?
Right. That works. That's good. That's a good one.
Now, but just remember one thing, and this is to you. People start talking between friends and business people in the same area talk a lot. As soon as you make a discount to the first person, that's your new price, because others are going to know about it. That's why financing will help you be strong at keeping your price integrity. If you're charging $1,800, make sure you keep charging $1,800. And if they say, well, I can't afford that, hey, no problem. I can take $600 down and finance for $59 a month. There's your real drop close. Be strong up front and use financing as your drop tool. Sell it for $1,800 cash, and when they can't afford it, now go with your drop to say, well, I could do it on a financing program with $600 down and $59 a month. Use that as your drop. Don't go to financing really quickly and then, ooh, now I have to discount my down payment. Follow what I'm saying?
Gotcha.
Makes it much easier and a much stronger sale to hold your price point and then bring in the financing to allow them to make a choice. The economy way, $600 down and $59 a month, or the all cash way at $1,800. Which do you prefer?
All right, so a couple people are asking about the application, which they'll see. And what's funny is Tammy says, is there an app for that? And then Potato is asking for it. And then Richard says, would you like an app for that? Exactly, Richard. Always be closing. ABC. Lesson. Big lesson for the day for all of you. ABC. Every time you get an opportunity. All right. Let's see. Okay. Can we collect the payment from them up front? Payment on their company check. Kathy's asking if she can collect.
Here's something, too. We are a consumer financer. We are not a merchant financer. Therefore, everybody has to sign for it personally. They can't put it down, I'm financing it as ABC Business. They are financing it individually. I don't care how they pay for it. They can pay for it with company checks. They can pay for it with auto payments off company credit cards. But they are signing personally because we are a consumer financer. They are the consumer buying the product.
Yeah, that's very important. That's very important.
Very important on that.
Yeah.
Now, how they pay for it, we do this all the time. And, they can pay for it with company checks, write it off just exactly the same way. There's no problem, but they are signing for it personally.
So Kathy's question here, after collecting the down payment, let's say the $600,
right?
And then they fill out the application. Can you have them write a check for the first payment post-dated for 30 days out so that it can be sent in with the application? I know you're going to be doing ACH, but
yeah.
What Kathy's asking, to secure that first payment, can we collect it and send it in with the application?
It still doesn't matter. Because if they're going to, I would prefer not. You are going to cause more problems because you want to keep this as clean as you can possibly be. You don't want to violate any financing laws. And therefore, that's why you don't want to do that. I can cite you about 7 different statutes, but the answer is let them make their own payments. Don't worry about it. They are, if the product sells itself, if you're that worried about it, don't sell it to them because the product's not very good. They'll make their first payment on their own.
That's right. Now, Lisa has a question. How do they pay us the down payment? They write down payment to us. Okay, so Lisa, the answer to that would be they could write your company a check or write a check to Lisa Williams, or they can pay with their credit card if you're taking credit cards. They pay that to you directly, and you keep that, and that you can also use as your drop close. Does the client have to collateralize the loan? Janice asks.
Absolutely not. These are signature loans. If we accept them, and Jess will tell you, they're not sold when they do this thing totally. We still have to put them through an automated process. You will know that night whether they are accepted or not. You can say, I'll take your application and your down payment, and I'll let you know tomorrow. And when you put it in, or if you have a computer there, you can actually put it in on site. But Jess can go over that part, but it will actually tell you whether they are accepted, yes, or they are declined. If they're declined, it's a no deal. If it's accepted, go forward. Now, in order to expedite things here, if everybody can see my screen, this is a paper copy of an application that every one of you will have to be able to use in the field. Just this information here, name, social security number, address, home phone, employer, and some relatives. It doesn't have to be a relative. It could be anybody as a reference that has a phone number. That's all we're asking.
You'll only need 2 in the application. So as long as you can get 2 references, they can be friend, family member, whoever you want them to be. But there's only 2. The paper app has 3.
Paper app has a little more. This is just something to get so you can get information so you can input it into the automated system if you don't have a computer in the field. But I want to explain. You definitely have to get social security number, birthdays, and addresses. Home phone numbers and cell phone numbers need to be different. If they don't have a home phone, leave it blank, and we'll teach you how to put that in. A lot of people, just like myself, only have a cell number. For that, business numbers, don't put self-employed for the business guy. Put the name of the business down. If he's the owner, put the owner, and put down the name of the phone number for the business. Because when we go to verify the business, we want to have the business answer ABC widgets, not hello. Because a lot of owners want to put their own cell phone number down and have you call them. That's not what we're trying to verify. How much is he drawing? Other income sources, I'm really not worried about that if they're business owners and that type of thing. Co-applicant, I doubt seriously if you're going to need a co-applicant on any of this. And Jess can go over the importance of those numbers and the duplications of it, but it's real simple. And once you start plugging in, the application that you put it into in the electronic system won't let you screw up. Paper apps will always let you screw up because you might write something down wrong, but in the other world, it doesn't let you do it. So that's just the importance of what we have here. And I want Jess kind of go over.
Scott.
Hello?
Scott, just a quick question for you.
Okay, go.
It's about the application. So with all the private information on the app, some people may not want to give the app to the reseller to send in. Can they just send it directly into the financing company? I have an answer for that, but I want you to answer it first.
We are a third-party financer. We are not a direct lender. They cannot send a direct application to us under any circumstances because that's not how it is. They are actually going through Go Mobile for their financing.
So then I guess let's switch that up. What if they want to send it directly into Go Mobile?
They're still, you could, here's how I would do it. I would, there's no way physically.
Let me tackle it. Let me tackle it because this is really a non-issue, Steve. Just with my years of experience doing this, you are the business owner that is in the business of designing and developing mobile apps. Whether you call it, Steve's Apps, or you're doing business with Steve Sampson, or whatever it is, you're in business and you offer financing through your technology partner, Go Mobile. So they do some stuff for you on the back end with the platform, and they also do your financing. And you're going to close the deal with your proposal and your finance agreement. You're going to use the online info. I think they're going to show you how to do it online here. You can also do it with paper app, but you're also going to do it online with your iPads and all that good stuff. But they're doing business with you, and they shouldn't have a problem. It'll be rare if it does happen. And then if it does happen, the guy's way too uptight. And anyway, so that's all.
Yeah, if he doesn't want to write it down on that, tell him you call him from your house when you're back to your computer, and you'll input it in the computer when you're at home. And
Right.
You'll do it by phone with him. And at that point, everything will be electronic over to him, encrypted in 7 different ways, and he'll be signing electronically in a secure mode off of his computer.
Okay, let's. I know you're working on this application, but I do want to keep some of the questions getting answered too that I don't know how to answer. Credit. We didn't talk about credit. Bad credit, good credit, no credit. What are we financing? What percentile are we approving? How's that working?
I don't. That has to do. We look at 3 different models when it goes in there, and I can't tell you. We've got it set up very loosely. They have to have ability, stability, and willingness to pay. I do know this: if you have less than 6 months on the job and less than 6 months at work, it ain't gonna fly. But most of these business owners have been longer than 6 months. And as long as they are making more than $2,000 a month, and then they have any kind of credit history at all, they're going to pass. And that's all I can say, because it's not. There's a whole lot of triggers in this thing, and without going into detail over what took somebody about 20 hours to program, it's a model that's set up so that you'll have the good people. You can't tell whether they went bankrupt yesterday, but we'll be able to tell that. So the only ones, unless they've recently destroyed their credit, you'll probably have a good shot at them.
Cool. All right, go back with your application.
Okay, and anyway, this is the application. That's it. The rest of it, Jess can go over that. They'll have electronic paperwork that they'll be getting, and we'll teach you how to after it's input, how to teach them how to e-sign, which is, go to this page, click here, accept, and be done.
And that is so easy.
I think probably the next thing to do is turn it over to her and let her do her part.
All right, are you guys ready to train on this application? It is very simple. The paper application is simple, but this is even better. What we are going to do, let me get over here. Okay, now I've also supplied a PowerPoint that will direct you through the application process as well. At a later date, if you guys have questions, you can always refer back to that. What we want to first do is, this is the Universal Guardian website. This is where you will go to submit all applications. So if you are in the field, you're selling face-to-face, if you have your laptop there with you, you can access this. I know there was a lot of questions about taking that paper app with you outside the store. Like you said, that a lot of people are a little hesitant to let their social security number walk out the door with a complete stranger. This way you can input that information into the system, submit everything, and then we will actually email them for them to complete their e-signature documents to be sent back to the company so that we can fund you guys your money. Now what you'll do is you'll log into the UGA website. It's right here at the top, and it is also on the PowerPoint that I'll send over. And you will go here to eSign Login. Now you'll be assigned your eSign Login. It'll be your email address, and then we'll assign a password to you. And when you log in, you're going to see 2 sections on here. You're going to see transactions, and you're going to see search reports. The one that you're most concerned with is transactions. This is where you guys will go to submit an application. If you guys have questions, just stop me in the middle. It's no big deal. When you come in here, you'll hit the scroll down. When you hit the scroll down, you guys are only going to see Go Mobile. I have too many in here. Once you click on it, it's going to bring you into the actual application itself. There's only maybe 20, 25 lines that you've got to complete. It's pretty simple, possibly take you maybe 10, 15 minutes to input all the information, possibly less if everybody's got the information right there for you. Now, with this being business oriented, what we want to do first is the line of credit. So if you know that they're going to take out a note for $1,800, you would put the $1,800 there in the top. If they want $3,000, $1,500, whatever dollar amount they're taking, go ahead and put that in that line there. I'm just going to put in a mock application so that I can walk you through the process of the application, the decision, the credit decision, and the e-signatures. So we will just put in
Rubber ducky.
Rubber ducky. And if they have, I'm not sure with businesses, most are going to have their physical address. If they don't have the physical address, with it being an individual purchase, if they have a P.O. box that they use for their mailing address, make sure you get the physical address.
Use their personal home address on this, because that's what's going to come up on their credit report.
Right. I'm talking if they have a personal P.O. box.
Right.
So if they have, you'll want their physical address because you want anything that's going to associate with them on their credit bureau. If they do have a mailing address, you can go ahead and put the P.O. box here. We will use that for mailing purposes only. And then, of course, your city and your state. Now, the email address is very important. You want to make sure that you have a valid email address for that consumer. I am going to use my email address, like I'm the one buying this product from you, just so that I can walk you through what they are going to see on their end with the e-signature documents. Home phone. A lot of people, as you know, they don't use home phones anymore. If they do not use a home phone, you can leave this blank. If they do use a home phone, obviously just go ahead and put it in the system. And then their cell phone. In here we have marital status, married, unmarried, or separated. We're going to go with unmarried today. Purchase price, just like up here, you'll want this number here at the top and this number here to match. So we'll do $1,800. And if you have $600 down, and then the items purchased, delivery date. This is always the current day's date, not the day of delivery of the product, but the day that they submit the application. So we'll put today's date, and we are going to use a 18-month term. And here, like Scott said, more than likely you guys won't use cosigners very often, but if you do, you would click yes, and then on step 2, you have the cosigner information. So we're not going to use a cosigner, so on step 2, it eliminates all of those areas for the cosigner. This is an important spot as well. Is buyer present to immediately sign? Even if you are face-to-face with them, go ahead and put no, send email agreement. Because what you're going to want this to do is you want this to actually email them the documents. With the e-signatures, the IP address stamp is what validates who is making these signatures. So if they are going to sign their documents, they need to be able to provide that valid email address so that that document is sent to their email. If all else fails, you can always put yes, buyer is present, but in that instance, you would have to print the documents, have them actually physically sign them, and mail them into us, which is going to create a headache for you guys because that's going to be too big of a paper trail. So just stick with the no, send email agreement, and then continue to step 2. And you'll want this social security number and the date of birth. Now on the calendars, you want to do the scroll down tabs first. So you'll do the month, the year. Actually, let's do, where did that date go? So you'll do the month, the year, and then the date. And then employer, just like Scott said on the paper application, most of these people own their own business. Don't put self-employed in here. Go ahead and put the name of their company. Because when we purchase this, when we do our verification, we'll want to know the actual name of the company. Obviously with Go Mobile, and we know it's a business purchase, we're going to know that they are self-employed. Date of employment is going to be the day that they open their business. And again, you'll want to do the scroll downs first. Do the month, the year, and then the day. And the day. And then their position there, whether they're an owner, manager, employer phone number. This is an important number to have for our verifiers to call and verify so that you guys can get funded on your money. And you've got your gross monthly income. Other income sources, you know, if they collect some type of pension, they can add that. Social Security, anything that is paid directly to them each month, they'll be able to use on this. Now, they will not be able to use a spousal income. If they want to use a spouse, their income, they will need to be listed as a cosigner. And then you'll do the mortgage company, landlord. If you rent or own, we're going to rent. And we pay $850 a month, and we've been here 5 years and 6 months. Continue to step 3. You've got your 2 references.
Got a note for you here, just for a second. You deal with a lot of real estate agents out there. They sometimes own properties and have rentals. If they do have rental income, put that as other income because that will show up as mortgages on their credit report. So make sure that you put that in.
And then we've got one more reference here. And we will say brother. All right, so we have completed the application. When we click review, it's going to let us know if we've made any mistake on here in this pink box here. So we'll click review, and it looks like the Social Security number that I entered was incorrect. Got 1 too many numbers, so we'll take that 5 out there. Continue to step 3, back to review. All right, so the system accepted my application. Now, what you want to do is you want to look through here, make sure everything looks correct. You've got the name of your company. You've got today's date. You've got the entire purchase price. So if they're purchasing $3,000 with $600 down, you would put $3,000 here. $1,800, $600 down, $1,800. No matter what they're putting down, you always put the entire amount that's purchased at the top. And then their cash down. And then here it will calculate the amount that they are requesting to finance. Then you just want to skim over, make sure you've got the correct social, phone numbers are right, you've got the correct name of the business. Everything looks good. You would hit send form. If you see something that you've made a mistake on, at that time you can hit return to edit, and it will take you back into the application where you can correct the mistake and then go back to this form here, hit send form, and this will generate it into Universal. And here is where you will receive your credit decision, approved for purchase. And then here it tells you that an email has been sent to Jay McLeod at that email address to sign the e-signature document. Now, do you have any questions about the application before we move on to the e-signature?
It is pretty simple. If they're declined, it'll say declined. If they're approved, you'll know they're approved.
Right. It's either or.
All right, that was very thorough. Not one question.
Perfect.
Cool.
Now, what are the differences? I got a question for you. What would be, okay, so you've got this e-app, which is obviously preferred. It's easy, it's simple. You don't have to, you cover the objection of taking the personal information out of the store on a paper app, but in the event you got to do the paper app, you know, is it just as simple as
well, the paper app you're going to convert to this e-app when you get home.
Right.
It's all going to be e-app when it goes to your consumer.
Right. So even if you're in the field and you give them the paper app to fill out, once you get home at night, you'll sit down with your computer, you'll fill these in, send them on their way. So if you've got 15 applications to put in, All you need to do is submit the applications one by one, and you'll get your decisions after each one that you submit.
Those
and then they'll do their e-signatures through their email.
Yeah.
Go back to
those
page
that have your computers
2.
in the field will have your answer within about 90 seconds.
Page 2, I'm on there right now.
All right. Thank you. All right, so we're at the 1 hour mark. The bell has rung. Are there any last minute questions, or do you, Jessica or Scott, have any last minute notes to add?
We do.
I would like to run you through the e-signature really quick.
Okay, let's do it. Let's do it. I mean, we've got some more time. It's just that I want to let everybody know we're at that hour mark, just in case everybody was.
How soon will the decision arrive? Within seconds. As soon as you hit that send button, however long it took that, 3 seconds, and we had our approval, that's how long it will take to receive your decision. Okay, now this is what you want to advise your consumer to do. We sent them the email that went into their email box for the application so that they can do their e-signatures. This is what their email is going to look like. They will click here to review and sign the documents. This is going to throw them into the electronic signature disclosure box, lets them know that this is a legal binding contract. What they'll want to do is read over this, hit continue. Now, here at the top of the screen where it says welcome, please type your name, Rubber W. Ducky. This is what you need to have identical to the signature. So if there's a capital letter, if there's an extra space, if there's a period, you've got to use it just the same as it is here in these quotation marks. My advice, instruct them to copy this so that they can paste it into the signature slots. So what your consumer is going to do is they're going to read through this, make sure everything's correct on here. Any place that they need to sign will be highlighted in yellow. They'll input their signature and they'll click review. They'll review this document. There's their name and today's date. Everything looks good. Send form. Throws them over to the revolving charge agreement. Another signature. All the way down, the truce and lending. A little bit farther. Gives them the charge authorization, which lets them know the amount that they're purchasing for, the amount that they're going to put down, and the initial charge. They will put one more signature here, and they will click review. Everything got their names, the dates, and down at the bottom, their name. Now, if there was a cosigner, as soon as Rubber Ducky was completed with his portion of the signatures, it would then generate the same email to the cosigner, and they would go through this exact same process. And they would hit send form. This is our auto debit authorization, and this is optional. I would promote it if I were you. There's a better success rate of those payments, and especially with you being on the first payment default, it's the perfect way to collect your first payment without a worry in the world. If they want to use a checking account, all we need is the bank name, routing number, account number, and whether or not it is a check or a savings account. Or they can use a credit card. Credit card, debit card, need the card number, expiration date, and the type of card that it is. We accept Visa, MasterCard, or Discover. If they choose to use this, they'll fill one of these two portions out, sign their name, and click review. And that's going to print up and show them exactly what they've inputted into the system. If they choose not to use this, they will click no thank you. Many people get hooked up on the return, thinking that if they hit return, it's going to return it to us. It just takes you back to the previous page. So we're not going to use this today, so we will click no thank you. And here's where we will know that our application was sent over to Universal Guardian. And the application process has been completed. Now, any questions about the e-sign?
Nope.
Okay.
It's a simple process, guys.
It's very, very simple.
Hey, Potato, this does not include the maintenance fee to Go Mobile for the $39.95 per month. Just Make sure you know that. They're two separate events. It's just when you're doing the presentation, you know, if you opt for the 24-month option, you know, where you get funded $1,500, you know, say it's $600 down and it's less than $100 a month. $600 down, it's less than $100 a month. That's an easy pitch. You can do that over and over and over again. We're going to build a beautiful custom app that's, we're going to take all the right content online. We're going to repurpose it in the mobile environment for all your clients and prospects. You're going to love this thing. And you're going to pay $600 today. We're going to get to work tomorrow. And you're going to pay less than $100 a month to maintain this. They start comparing that to what they're spending to be in the various advertisements they participate in. You know, it's a no-brainer. And if you can't make it a no-brainer right at that moment, then you drop the $600, or you work terms on the $600, whatever you need to do. But this should make it really easy for you guys. In fact, some people may say, well, I'll only use payments when I need to use payments. I would disagree with that. I think the payment should be right out there in the open, right up front. By the way, we have plenty of options to do business with us. We could do a financing program with great rates, or we could do this and just lay it out, you know, and just, like I say, get in the business of writing business and offering multiple options. So anyway, I hope this tool, I hope you appreciate this tool. It took us 3 months to get these guys to finally take us on, and, you know, so really take advantage of this. This is an incredible resource that's just being thrown in as a value add to your relationship with GoMobile. And I'll continue to find more ways to enhance your opportunity just like this. So please take advantage of it and get on it. If you have any more questions, you know how to email me. Just send me your list of questions. I'll get the answers from Scott and Jessica. But the apps are ready now. So, all right, folks. Well, listen, I want you to have a fantastic weekend. Thank you so much for your time today. Take advantage of this resource. Let's make some money and sell more mobile apps. Thanks, everybody. Thank you, Scott and Jessica, for your time today. Appreciate it.
You're welcome.
All right. Welcome aboard, everybody.
All right. Thank you. Yeah. Bye-bye.